In this video, we're going to talk about what an expense is in financial accounting. So when you hear the term expense, you might just think about spending money, and that's certainly a component of it in certain instances, but it's a little bit broader definition than that. So let's just talk about this. When we think of an expense, we really have some outflow or using up an asset or even incurring a liability, getting a utility bill in the mail or something like that, where you haven't necessarily used an asset, but you've incurred this liability. Any of those things that is really resulting from delivering or producing goods, rendering services, basically something that relates to the firm's core business operations. So in that respect, an expense is kind of the mirror image of revenue, and that revenue also had this idea that it was distinguished from a gain in that it was related to the firm's core business operations and not some kind of peripheral activity. So let's put some examples out here because that definition is kind of dense. So some examples of expenses. Let's think here. So we have cost of goods sold, which I'll just abbreviate as COGS. We've got interest expense, right? You borrow money from the bank to start your business, so you're going to have some interest expense on that debt. Rent expense for your warehouse or whatever kind of business you, salaries to pay your employees, so your wages are going to be an expense. And if you look at an income statement, you'll see all these different things, right? There'll be interest expense, rent expense, salaries, wages expense. All these different things are expenses because they're related to your core business operations. And then we also have this thing that's very popular, you'll see a lot, called depreciation expense. And this kind of has to do with kind of this idea of using up of assets. And even when we think of like an asset like prepaid insurance, as that is used up, as we use our insurance, or basically, 1 month passes, we say that we've used up 1 month of our insurance plan, and then that will actually lead to insurance expense, which is another thing that I'll have. Now, when we think about all these expenses, remember, these are all related in some way to, again, this idea of the core business operation, right? When we think about paying our employees, that's a pretty important thing. We really can't run our business without doing that. Now, let's think about an example here for a minute, and it'll kind of help us kind of get this idea of what an expense is versus a loss. So let's just say, I'll just put EXP here versus loss. Now let's put together a little example. So in our example, similar to our revenue video, let's say that we're again running a restaurant. So you own a restaurant, and we want to think about what is an expense versus what is a loss. Okay, so this is kind of the idea we're getting at here. So when we think about expenses, and let's just put it here. So expenses we'll have on the left. When we think about let's say you borrowed some money to start your restaurant, right? So that interest is going to be an expense. We're going to have some interest expense. Now you have to pay your employees, right? So we'll say salaries expense, right? All these things are really important. If you have to buy food for your restaurant, then you sell the food, so that's cost of goods sold. So you have these things. But we say, okay, well, what would be a loss? Right? What's kind of on this right side? What is a loss? Well, a loss for a restaurant would be something like, let's say you own stock. You own stock in Microsoft. So you own stock in Microsoft, and you decide to sell it. So you sell the stock, and let's say that the cost of the stock was let's say it cost you $50 when you bought it, and then your selling price was $25. So you sold it for $25, but it actually cost you $50 when you originally bought that stock. So what happens? Well, you have this negative 25, and I have in parentheses to indicate it's a negative number. So this is negative 25, right? So what do we call this? Well, that's not an expense, right? Because it doesn't relate to this idea of your core business operations, right? You're a restaurant, remember, right? You don't buy and sell stock for a living. This is really some kind of, like, we'll call it like a peripheral activity. It's really kind of a side thing. So when we look at that $25 there, what we're going to do is we're going to call that a loss. And the idea is very similar to distinguishing between revenue and gains on the income statement. And what we want to do is when we've got that income statement, we want investors or whoever's using the income statement to be able to distinguish between something that's really related to that core business idea, right? Something is, we think, okay, well, what are the expenses to run this business? And then we also want to be able to decide between something that's maybe just some kind of one-time item, or maybe for whatever reason it's really something that doesn't have a lot to do with the operation of this business. So really an expense is we're using up an asset, we're having some kind of outflow, or we incurred a liability, we got a bill for utilities in the mail or something. We somehow have something like that, but it relates to the core business operations as opposed to something like a loss.